Hi, all. Thank you very much for joining on a Wednesday afternoon to listen to a webinar on autumn budget, which happened a few hours ago. A big thank you to my team for putting all these slides in a very short notice um, to make sure that our clients get the first information, first the information quickly. Well, before diving into the budget speech today, I just want a quick recap from the spring budget that happened a few months ago. On that budget, the previous chancellor said the national insurance for employees will be reduced from 2% will be reduced by 2%. So for both employees and self-employed from April 2024. So that's going to stay. There's no change on that one from the speech today. Child benefit, one of the announcements that came from the budget previously was currently child benefit is you can claim up to you or your partner and 50,000, and that will be increased to 60,000, and the limit on that will be 80,000. So if you earn more than 80,000, you cannot claim anything. But if you earn between 60 to 80,000, you can claim part of child benefit, and part of it you need to pay it back. Capital gains tax, which was 28% if you're a high taxpayer on the second property, that got reduced to 24%. So that's staying as it is. So that's not going to change. VAT registration threshold is 85,000 prior to 1st of April 2024. That got changed to 90,000. So that's also staying as it is. We didn't hear anything otherwise from the chancellor today. So those are the key main recaps from the spring budget. So we'll dive into the autumn budget that happened today, the first Labour government's budget, also the first female chancellor's budget. So it's quite a historical one. A lot of speculation prior to the budget, a lot of scaremongering that happened through the media about the budget. My personal view is it's not as bad as what we thought. So, we'll start from that. Tax rate frozen until 28-29. So currently your personal allowance is 12,570. So that stays as it is until 28-29. And all the tax rates stays as it is until 28-29, which means the inflation is up, the tax rates are not going up. So there is a fiscal drag, meaning you will, in the present day terms, you will pay some extra tax, but maybe there's no increase in the tax rate. So there's some comfort over there. Business asset disposal relief, or known as entrepreneur relief. There was a lot of speculation about this going away, but good to see that's not being touched. So capital gain is going to stay. Only thing that's going to happen there is the increase in rates. So from April 2025, CGT will go up by 14% for business asset disposable relief. From 2026, that will go up to 18%. So, something to think about if you are, thinking of going through liquidation or selling a business. Key to remember these dates. Capital gains tax, again, a lot of speculation about Chancellor is going to bring in capital gains tax in line with the income tax. That did not happen, which is a good news for the market. So currently, lower CGT rate is 10%. That's going to go up to 18%. So if you're if you're someone who buy and sell shares or currencies or gold or crypto, whatever, currently, if you're a basic taxpayer, you'll only pay 10%, but in future, you'll pay 18%. And if you're a higher taxpayer, currently you'll pay 20%, in future, you'll pay 24%. This also applies to any asset sales, right? Second home, investment, etc. Residential property rates remains 18% and 24%, so which I mentioned earlier. It used to be 28% for higher earners. That got reduced on spring budget for 24%, so that's going to stay as it is. Employment allowance. So employment allowance is if you are employing people, you need to pay employers national insurance. So up to 5,000, if your total bill is less than 5,000, you do not pay any employers NI. But if it's above 5,000, you do pay that delta. Currently, that's been increased from 5,000 to 10,500. The government believes that there are 865,000 employers will benefit from this one. But it's not all good news, because what they've done is they've increased the employment allowance, but on the other side, they've gone and increased the employers' national insurance from 13.8% to 15%, so 1.2% increase, which is quite significant. They've not only done that, they've also gone and reduced the threshold from 9,100 to 5,000. So if you're employing someone currently, if you pay someone 9,100 as a salary, you do not pay any national insurance, right? Employers' national insurance. No, I'm not talking about employees one. But in future, if you're paying 9,100 on that 4,100, you have to pay 15% national insurance. And if that 15% is less than 5,000, combining all the employees, you wouldn't pay any less than 10,500. You will not pay any national insurance to HMRC. But in future, if it's about 10,500, you will have to pay employers' national insurance. Employees' national insurance not change. On also the 2% reduction that I mentioned from spring budget, so that's not changed. That's going to stay as it is. National minimum wage. So this is going to be a quite impactful. All those small businesses employing people. So if you're employing someone who's apprentice, their rate's going to go up by 6.40 to 7.55, one of the largest increases I've seen in recent years. And if you're employing someone between 18 to 20, their rate's going to go up from £8.60 to £10 per hour. And if you are employing anyone 21 or above, their rate's going to go up from £11.44 to £12.21. So, those businesses who are employing people, who are employing apprentices, going to feel the pain because they have to effectively pay higher wages, higher employers NI, and no change in corporation tax either, right? So that's going to stay as it is, 19% and 25%. Inheritance tax, again, a lot of speculation on this one prior to the budget about it's going to go away. Good news is it's not going to go away. So inheritance tax stays as it is until 2030. And residence relief is if you're passing your main resident to your descendant, so that goes up to 500,000. So 325,000 plus 175,000 for your residence relief. And spousal relief is if you husband and wife, that becomes 1 million. So that doesn't change. That's same as it is currently. But the main difference here is pension. So currently, when you calculate inheritance tax, your pension pot does not come into your inheritance estate. From 2027, your pension will be added to your inheritance estate. So that's kind of a big impact for people who have a lot of pensions and are trying to pass their pensions inheritance tax free. They're going to get impacted by this. Electric vehicle incentives. So the main thing with electric vehicles is that the government is going to start charging road tax. At the moment, electric vehicles do not pay road tax. So that starts from April 2025. And they're expecting 400 million revenue from that one. So like I'm sure if you own an electric vehicle, you should have got the letter from the letter already about this. But on the good news is that they're not changing the benefit in kind rates, etc. on the electric cars. They're going to keep as it is. So all the existing incentives of 100% capital allowance on the fresh new car, and the 2% on the BIK. So they all stay, which is a good news. Stamp duty. So if you are thinking of buying properties, or if you're thinking of buying a second home, which is effective from tonight. So if you're trying to buy something tomorrow, you're going to pay additional 2%, which is a significant amount. And if you waited for the conveyancer to do the searches, and if your completion date is from tomorrow, you need to account for 2% increase on your stamp duty, which is not a great news. But it's not going to happen from April next year. It's happening from tonight. Fuel duty. So Chancellor agreed to keep the fuel duty as it is. So the duty is frozen, which is good news. We shouldn't be expecting significant increase on our petrol and diesel bills. Domicile status. So this is a significant announcement. Previous government did touch base on this, but they never went and removed it. But the current government has gone and completely removed the domicile status from the tax system. So when I say domicile, if you're a UK tax resident, but if you have a domicile in another country, currently you can use a remittances basis or a rising basis on your foreign income. In future, you cannot do that. So if you're a UK tax resident, you need to pay tax on your global income in UK, right? So that's going to be a significant impact for people who are non-domiciles but residents in tax resident in UK. Private school fees. This was one of the manifesto points from the Labour. So they're going to go ahead and put 20% VAT from Jan 2025, and they're also going to remove business rates relief from the private schools. So this is going to have a significant impact on a lot of the private schools out there. So there will be a significant drop on the number of children going to the private school, and obviously it'll be quite challenging for private school to run with very less funding too. That's it for me. Thank you for joining. If you have any questions, please email or WhatsApp or contact me or my team. We'll be more than happy to help you. Thanks again for joining today. I hope we covered a lot of the points. We will send a newsletter with all the detailed points, because the document that Treasury has published is multiple pages long, which will be good reading for me tonight. So I will read that tonight, and we'll send a proper newsletter covering all the points on this presentation tomorrow. Thank you. Thanks for joining. Thank you. Bye-bye.